So diving into what can you do in real estate? That's one of the biggest decisions after you've made the decision to go to real estate. Everybody first jumps on Bigger Pockets bandwagon, right? Everybody knows what Bigger Pockets is, and they start to hear about short-term rentals and house hacking and all these other kind of small residential plays that you can get into. But the world of real estate is much bigger than that. You've got residential on the one hand, which consists of things like single-family homes, townhouses, very small multifamily, so that's duplexes, triplexes, quadplexes. You're looking at residential assets on that side. And then on the commercial end, even though it's residential, the 5 units or more, we call that commercial multifamily. And so you've got commercial multifamily, industrial, retail, office, specialty uses like churches, synagogues, other religious types of facilities. That's really the next decision after you say, okay, I want to get into real estate. How do I do it? You want to look at what are you comfortable with and how can you start to understand and identify opportunities either on the residential side or the commercial side before you start to dive in. On top of that, you can go residential or you can go commercial, but then you have to decide, do you want to be an active investor or a passive investor? And that's probably an even bigger decision, because if you want to be an active investor, you're following the Bigger Pockets playbook. The thing that you're going to do is you're going to go try to find your own deals. You got to raise your own equity. You need to find your own debt. You need to manage the asset. You have to execute the business plan. And hopefully at the end of the day, you're either cash flowing or you're able to sell or refinance and have a successful operation. That is not an insignificant amount of time. So that's a lot of work, and that's why the real estate industry exists, is because there is so much work that goes into each one of those aspects. Sourcing deals, that's the world of brokers. Raising equity, that's private equity fund managers. Arranging the debt, there are debt brokers for that. Asset management, that's the property management people. And executing the full business plan, that could be a whole host of different people that would be interested in doing that. And so you trying to do all those things on your own as an active investor is really a large time commitment, and where a lot of people fail. They get in over their heads and trying to do the whole thing themselves. The alternative is that you can go as a passive investor. And if you go into a single family residential as a passive investor, a lot of times people would do that with friends and family. A couple of people will pool their money together, buy a single family house, rent it out, right? That works. Some people can do that just fine. You pick which family member or friend that's going to be the lead person on it, but you don't have a lot of risk protection. You're probably not executing like major contracts that help you understand what happens when things go wrong. But then on the other hand, you have the larger things that you can do. You can get pooling your money into a fund or into a syndication. You have access to these larger commercial opportunities. So that's really the avenue that has been opened up over the last years, is how can people become a passive investor in large opportunities or in just private real estate opportunities that previously were reserved for, they call them country club deals, right? So people would only get access if they were at the country club and being presented to. But that's not the case anymore. The people can get high quality passive investment opportunities that they don't have to be a member of the country club to see. So when you're getting into that decision, do you want to go active or do you want to go passive? There's a decision framework that you can probably use that you can walk through and say, okay, how much time do I have to commit to it? If you don't have any time, you definitely want to choose the passive path. If you have certain tax considerations, you could go either way with that, depending on what those tax issues are. And then do you want to have control over it? And again, this kind of goes back to the time question. Or do you want to be diversified? You want to put a little bit of money with one operator or put it with 10 different operators so that you have real diversification. And then you have liquidity tolerance, right? If you're in control and running and managing your own single family house, you have the opportunity to list it and sell it at any point. If you go into a passive investment, it depends on what your contracts say and what your investments are like at the timing of it, right? So then you have your risk and return, and you have all of these different considerations to think through. But I wouldn't jump headfirst into any of these things without really working through what it is that you're looking for. And then that's the framework that I would use time commitment, control and diversification, liquidity, and then your risk and return targets.
This video is for educational and informational purposes only. It is not investment, financial, legal, tax, or accounting advice. Nothing in this video constitutes an offer to sell or a solicitation of an offer to buy any securities or investment product. Any offering, if made, will be made only through official offering documents and in accordance with applicable law. Any examples, projections, or assumptions are illustrative only and not guarantees of future performance. Past performance is not indicative of future results. Investing involves risk, including possible loss of principal. Real estate and private investments may be speculative and illiquid and may not be suitable for all investors. You should conduct your own due diligence and consult your own licensed advisors before making any investment decision. The presenter and affiliated entities may have financial interests in investments discussed. All information is provided as is with no warranties as to accuracy or completeness.